Hello and welcome. You're watching Budget of Hope, an initiative by ICICIdirect.com. Economic Survey 2021 has been tabled. To talk about the important highlights of the survey, I have with me a very special guest, Ms. Radhika Rao, economist at DBS Bank. Welcome, Radhika.
Hi, Geetu.
India has experienced a faster than expected pace of economic normalization. Now, in the survey, GDP growth for FY22 has been expected at 11%, with nominal growth at 15.4%. Do you expect these kind of targets to be really achieved? Lately, IMF also came out with its predictions and saying that India might grow by more than 14%. And the survey also says that upside potential to conservative FY22 growth forecast remains. So what are your views?
Well, certainly, I think what India has done that many of the other countries are still looking to do is to break that, the linkage between mobility. So even though mobility has been going up, the virus caseload has been going down, and that hasn't happened in many other countries, and hence the struggle with reviving growth. I think the growth targets that the economic survey seems to touch upon, I think it's close to where we expect as well, and I think the larger consensus is also thereabouts. I think the double-digit growth forecast, it's partly a cyclical rebound from a tough time in fiscal 21, and I think it's also to a big manner also because of base effects, right? So you're going to have one quarter, that's the June quarter, that's going to see very strong double-digit growth, perhaps in the region of 25-30%. So that's going to give an automatic lift. So insofar as their assumptions are concerned, I think the real GDP growth rate is doable. The other part is the nominal, which means they've also made an assumption for a certain deflator, which essentially captures the inflationary momentum. I think that too, we do think that inflation, though it's off highs of 2020, this year you're going to see it's going to be a bit sticky. You'll see food come off, but non-food services inflation turn to be a bit sticky. So that essentially adds to your real GDP to form the nominal GDP. So yes, I do think the numbers look quite doable. In fact, and we should put in some kind of humility as well, because we're talking about a 15 months hence trajectory. As of now, things look good. In fact, we do think the second half of fiscal 21, India can return to growth in terms of the headline GDP. So net, we might see contraction even better than what the economic survey seems to mention, which means that, again, it will give a bit of a fillip to the number forward.
Economic survey is hinting at continued fiscal support. Would that mean that fiscal slippage would be a little choppy?
So they do make a case. I think this juncture that the economy is in, it's a very important one, and I think it is crucial on several fronts. First of all, if you go back again to the pandemic year, I think we have to take that as a base, because if I compare what happened in the region and how India put up its fiscal stimulus, the extent or the scale of the stimulus was not that big, right? So the government focused on two things. Number one, give sustenance help, basically make sure that survival mode spending goes on, particularly to the vulnerable parts of the society. And the second was the supply side push in terms of higher infrastructure, also making some medium-term reform announcements as well. So going into fiscal 22, I think the dynamics will be a bit different. Firstly, I think we need to realize if some of that pandemic spending will be brought forward. And I don't think you're going to see a complete stall on the kind of spending that happened last year. You are going to see some amount of welfare spending still continue. I think particularly the rural employment sector, I think you would see a bit more in going into healthcare for sure, because of the vaccination rollout that's still underway. And towards, I think, the rural employment scheme, healthcare, towards the agri part of the story as well. So you would see a lot more welfare spending continue, perhaps not to the scale that we saw last year, but certainly continue. So, and there are two camps now. There's one camp thinking that expenditure needs to be curtailed because this is the right time for us to fiscally consolidate. But I belong to the other camp, where I feel that the spending will be maintained. I think the mix will be different. Like I mentioned, the welfare spending part would probably come down, but there will be more supply side measures. You would see a lot more focus on private investment, infra spending, and some of the ministries whose outlays were held back last year, some of them would begin to spend. But with this mix in hand, I think what's happening, and that's where the background becomes very important, is that we are doing all this in midst of a cyclical rebound. Nominal GDP numbers are going to look very good. That means we are going to do something that the economy hasn't been able to do for a while, which is consolidate yet spend. So you, even as a percentage of GDP, if you maintain spending, say about 15% of GDP, you will still be able to consolidate the finances. So to that extent, I think from say 7%, 7.5% deficit in fiscal 21, we do think that it could be in the 5 to 6% contraction this year. Basically, it will mean that we are reconsolidating finances. Spending will more or less remain the same. But the big factor will be, first, GDP number is going to be quite strong. So the denominator factor, and secondly, there will be a natural buoyancy in revenues because of growth, because of tax buoyancy, and also indirect taxes, as well as non-tax. So non-tax, you will see the usual suspects, which will be disinvestment. You would see some spectrum allegations also expected, as well as the dividends from the PSUs as well as the central bank. So PSUs haven't been able to do a lot of capex because of the shutdown, and also you might see some dividend payments from them, which will basically help the overall fisc.
Radhika, private investment is totally absent, and it is not because of COVID. It has been there from last 4-5 years that their investment has been very low. Do you expect some kind of a boost for creating an environment for the private companies to really come forward and invest that would really lead to job creation?
Yes, you're very right in saying, I think the private sector, particularly the investment cycle, had been slowing down going into COVID, a bit due to a variety of factors. One of them certainly been that balance sheet deleveraging was still underway, and you had multiple main agents of growth, all of them facing balance sheet stress at the same time. So what we would expect, I don't think there's going to be a V-shaped as far as private sector investments are concerned. Certainly the public sector investments and public sector participation will certainly be very important. I think there needs to be a lot more hand-holding this year. When I say this year, I mean into 2021 as well as into 2022. But certain things have worked in the favor of corporates. Essentially, firstly being that this period of low rates, right? So borrowing costs have gone down quite sharply. That has helped some of the companies to deleverage to a certain bit. Secondly, what's happening is there's been renewed push towards formalization. Whether intended or not, because of the difficult times, you have seen that formalization happen, and finally you've seen profits and corporate earnings basically do quite well. So that gives you again a cash cushion to work with. So I think in those sense, I think when we come out of this pandemic, the private sector, particularly the corporates, are in a better shape than they went into the COVID-19 in the pandemic year. But I don't think they will be gung-ho to go into capex as yet. I think they're in a better shape financially, but they will still prefer to wait and watch to see to what extent the public sector is able to participate, and then we do hope that the crowd in will happen when the private sector comes in. So that could take a year or two at the least, when you would see more of greenfield investments as opposed to just brownfield.
There's a statement in the economic survey which says that government calls for fresh asset quality review of banks after COVID-related forbearance are removed. So what would that mean? I mean, RBI has also cautioned the banks, you have to take care of your NPAs, which might go up because of the COVID crisis. So do you expect some kind of a recap coming for PSU banks in this budget? Is there a scope for so?
Yeah, I mean, I think we, even prior to 2020, we had, I think most of the times everybody had gone into the budget expecting a significant or substantial capital infusion. I think it has happened, but it has happened in small doses. I think the government has been quite clear that they do require the banks to also go ahead and raise their own funding, from markets-based funding, rather than just completely rely on the government to play its part. At the same time, they've also pushed for privatization. They have merged some of the banks to basically consolidate the sector as well. So there has been movement on that front. Now, beyond the pandemic, the dynamics have changed a bit, certainly, because the banks have had to, undertake. The RBI had announced some band-aid measures, basically moratorium, and you also had some of the asset classification, which has been put on hold for a bit, and there's a recast window as well. So you really don't know the true extent of the problems that they face. But I think you could take a few indications. Firstly, the extent of corporates who went on for moratorium. They did start on a high, but by the time the window closed, the number of corporates who had taken that facility had trimmed down. So basically companies had started to repay. And secondly, being the recast window, initially there was an estimate that there would be a significant amount of companies that would go for the recast window. But then when, at least from the press or from our conversations, what we hear is that the recast window hasn't really attracted many companies because of a variety of reasons. The riders that they had put on it. Also, companies are worried about what it will do to their credit history and all of that. So if they've been able to repay, even with a bit of near-term pay, they have gone ahead and done that. So insofar as the economic survey is concerned, yes, I think it does suggest some form of AQR. I would think on the central bank's front, ultimately, I think it rests with the central bank, and then they would take a decision. Nonetheless, they are, I think, giving some kind of indication that there will be a pressure on NPAs. But to our eyes, I don't think it might be as adverse as suggested. You would see pressure for certain, but I don't think it might be as adverse. At the same time, you on the bank side, I think they have been doing some prep in terms of raising more funding. You've seen some AT1 bonds as well come up, where the banks have also taken advantage of the liquidity as well as a strong demand that was for the papers. So bringing all this together to answer your question, which is whether the government will do more, we do think that they might set aside some more fund for capital infusion, but I don't think it's going to be significant enough to just scoop the problem out of the window. So certainly it will come in smaller doses, and if you take the past 4-5 years, I would think that the entire recapitalization facilities is upwards of about 3 trillion plus. So they would continue to hope that in small doses it will be enough. At the same time, they do more structural things on the banking front, which is basically to consolidate the sector.
Bad bank story is back again. I mean, do you buy this? Can we hear about bad bank this time?
Yes, I think there has been quite a bit of talk about what form it might take. But I would, though I did come across it, I would have my own apprehensions in terms of whether what will be the take-up for this kind of a facility, because there are many administrative issues that need to be dealt with when we are talking about a bad bank or a bank investment company or anything of that sort. Firstly, who's the ownership. Let me say two things. First, it's not that it's a bad idea, it's a good idea to have, but I think it will come with its own set of complications which need to be sorted first. So complications being, who's going to own it, how are you going to value the assets. It has to be by default, arm's length from the government, and who's going to take care of it in terms of the administration. So, and it's nothing that it's not something that can just be done overnight, right? So you need a lot of legislative changes. It is something that will take time to form. So you're talking about a good 2 to 3 years from now when it actually could take effect. So I would think, yes, I think it's a good idea to have to at least consolidate the problems onto one entity. And I think there are some ASEAN countries, particularly Malaysia, who has done that in wake of the Asian financial crisis in the late 90s. So there are some examples one can look at, but it will come with its own organization administrative challenges. So I would think a lot of thought has to go into it, and it is something that will take some time to form and take shape. So though I am hopeful, I don't necessarily think that it would be a part of this budget.
Agriculture to clock 3.4% growth. What kind of measures do you expect for agriculture? We already have new law in place, which is yet to be passed. Any additional measures to really support agriculture sector?
Agriculture sector was, I think this is cliched again, but was the bright spot for the economy last year. Both the harvests came in on time. I mean, there were some weather variations, but otherwise it was really a big support, and probably the only sector that grew through the difficult times. Now, I think the kind of push we would see in the background, of course, those three reforms, that three farm laws that have been announced, they are, there is a bit of back and forth on the implementation and how far this can go and all of that. But I think in the very near term, insofar as the budget is concerned, I would think the payouts under PM Kisan, for example, could go up. For the rural sector on a whole, I think the Manrega program could also get higher disbursements, and there could be more sectoral support by way of food processing, making sure that the export channel, some of the minimum support prices could be held up. Those kind of smaller ticket decisions could be taken. But I would think the biggest overhang will be what happens to the farm laws, because that in itself carries a lot of multiplier benefits for the sector.
Any tinkering with the income tax, personal income tax?
I think direct taxes, we don't expect any change. In fact, the personal income tax structure was announced just in the last budget, where you'll have, if you were to adopt it, and it will be without exemptions. Similarly for corporate tax as well, you enjoy a lower tax without exemptions. So I think that part of the tinkering is largely over. So I don't think going into this budget we would see any tax decrease, so to speak, because I think the whole agenda would be to make up for lost space. So I don't think there'll be direct tax changes, but you might see changes or more optimism being put on the non-tax collections, like we started the conversation with, which is more to do with dividends, spectrum, as well as disinvestment. I think that is where you would see a lot more revenue buoyancy that would be expected. And similarly with excise duties, I mean, that's like a windfall at this point, but excise duties as well. But I don't think the direct tax structure per se will see any tweaks or decrease for that matter.
Looking at the economic survey, what cues are you getting for the budget? I mean, three sectors that you think would be in focus.
So the economic survey certainly lays out a very, thematically, it touches in a lot of things. It touches upon the banks, it touches upon debt sustainability, it touches upon healthcare. So it does, touch upon many themes. I would think if you go by the past, what happens with the economic survey is it's more of a prescriptive document, right? It's like a vision statement where the government's, it's a recap on the year that's gone by, on policy decisions that were taken, and secondly, it's a forward-looking document, but not necessarily binding on the budget. So you might or might not see some shades of the announcements today, or of the literature that was produced today on the budget per se. I think the budget by itself, we still think will be led to a great extent by pandemic-led shifts, where sectorally it will be focused on healthcare, it will be focused on sectors that were perhaps more affected by the pandemic, which is basically hospitality, aviation, construction, apart from which you might see some the K-shaped recovery, if I would say so. The growth is basically asynchronous, right? It's been led by profits and margins, not so much labor and wages. So insofar as that disconnect is there, I think they would do more welfare schemes. So I would think the economic survey per se, its contents might not be binding on the budget, but the budget in itself would look at more priorities which will be in light of the pandemic and influenced by the pandemic, where we think that it will be more about the healthcare, it will be more about maintaining welfare schemes, and it will also be about keeping up some of the sectoral push that got affected by the pandemic a lot more. And I think above all of this, I would certainly look for if there's any medium-term indication in terms of the glide path we're going to take from here on. Certainly the FRBM in the current form, might not be very useful. So we would look at if there is a 4-5 year trajectory that might be presented as part of the medium-term framework.
Thank you, Radhika, for being with us and sharing your views. It was a pleasure speaking with you.